Good morning, traders. This is Brad Matheny. Today is Saturday, the 22nd of February. I am going to do the video today because tomorrow I have a family event to go to. And today we're going to start with some new features that I've created for my TradeTank.com site, which are these long and short-term market gauges. The blue line is the short-term trend setting, and the black line, the heavier black line, is the longer-term setting. The objective of this chart, these gauges, is to show you what the markets are showing based on my adaptive rotational trend model. For example, the NQ is showing short and long-term bullish still. ES is short and long-term bullish. YM is short and long-term bullish. Indu is short and long-term bullish. Tran is both bullish. SPY is both bullish. Gold is both bullish. Silver, short-term bullish. Longer-term, intermediate-term, neutral bullish. And oil is both bearish. Excuse me. The second gauge system that I've created is a overall market allocation gauge, whereas this top indicator shows us what to expect across the major markets. This is a kind of a combination gauge showing you what's happening on the ES, NQ, YM, and SPY. Everything is still bullish. I'll show you these in a minute. It's telling you here U.S. markets continue to trend higher. Long and short-term trends are still decidedly bullish. The downside rotation in price may become a major market top, yet we still don't have any confirmation at this time. I've reduced the allocation into markets by 10% and increased the allocation into metals by 10%. Get ready. What I'm implying by this is that we might be at the beginning of a contagion event that may span the globe, indicating that we could see a continued moderate decline in economic activity over the next 3 to 6, possibly 12 plus months. What I'm suggesting for retirement account or for active traders is to start pulling back active longs, get into a net 15% or less active position with actual stops in place to protect against a breakdown. Move your cash position to at least 40% if you haven't already. You should be at least 35% or more into metals. I believe that the metals are starting a very large and extensive parabolic upside move. And right now you should be at less than 10% into bonds, although bonds will likely move higher if we get confirmation of an actual downtrend move. So for example, if the markets do rotate down into neutral bearish overall, then we would be looking at trying to reduce the overall market activity, possibly getting into some inverse ETF, bearish ETF trades, staying strongly into metals, reducing our cash holdings by about 15%, maybe a little more, and moving more heavily into bonds. All right, next I'm going to show you the charts that I've created in the Trade Tank live trades, Mint live trades market updates. So this is our stock market valuation, U.S. stock market index. Sorry, not the valuation index. You can see we're in this upper channel here. You can see that we've moved up to this upper level and begin to see some weakness. This is just as I expected. This upper channel is going to operate as a fairly solid resistance level. You can see how the RSI has continued to channel through this trend. Right now, we're still bullish. Obviously, we're still in an uptrend. We're still looking solid on the upside, but there are some concerns with this virus, and a breakdown of this level down here would indicate we are entering a new bearish trend. So again, right now, everything is still bullish, but we're fairly concerned about the long-term potential here. This is our Smart Cash Index. You can see that we've reached a peak back in early 2020. You can see this rotation to the downside. This is the Smart Cash Index. Again, excuse me, telling you that smart traders, smart money is actually being pulled out of the market right now. The rally that we've seen in the SPY and the NASDAQ, particularly in the technology sector, is almost foolish, euphoric money being poured into what traders believe to be a never-ending trend. The reality is that we're starting to see some downward activity. We've broken through this level, this channel. We're more than likely going to end up back down here at this lower channel, And again, if we break this channel to the downside, we could see a dramatic devaluation in global markets. So pay attention. We're very early yet. We don't have any confirmation of a downside, new downside trend, but we are starting to see some weakness in the market, some actual divergence in what's happening in the market. This is the metals index. The metals index, as I've been telling people since honestly back in this area, 2018, October 2018, I predicted this move, this rotation, this rally, expected gold to move up to 1750. It stalled around 1610, 1620, rebased, and now we're on our way to 1650, 1750 right now. Metals will continue higher. As fear continues to enter the market, metals will enter a very strong, possibly parabolic upside move. My initial target level for gold right now is 2100 to 2200. My ultimate upside target is above $3,700 in gold, which should put silver up above $50 to $60 an ounce. So pay attention. This is a big move. Fear is going to hit the markets. It's the rally in metals is just getting started. I can't tell you enough that you should be in metals right now or miners. Lastly here, or close to last, we have the volatility index. This is one of my favorites. You can see we've had this rotation, almost like a head and shoulders formation right now. This is a very moderate downside move for what we've seen just recently. 2-3 weeks ago, we saw this big gap downside move with a rotation back up higher. This is a moderate downside move, almost more along the lines of this type of rotation or this type of rotation where we actually are going to see potentially a real move. When the move breaks lower like this, if we have follow through, it'll normally be 1 or 2 weeks and then it'll stall and start to bottom. This was the January, February 2018 peak. When we saw the October 2018 decline where it lasted for 4.5 months down to the December lows, you see how we had this breakdown up into this range, and then we had perpetual downside price activity. This was a very quick, deep downside rotation with a recovery. This was more of an extended downside rotation with the recovery. Then we had a couple of pullbacks. These were nothing more than 6-8% pullbacks in the major markets. We've had a couple of these minor little pullbacks here and just 3-4 weeks ago here. But now we might be setting up for a deeper pullback level. This could be more along the lines like this: moving lower, stalling, moving lower, stalling, moving lower, and potentially moving down into the 6-8 point range. This would be likely at the beginning of a bottom down in this area. So as I mentioned in one of my articles about the waterfall event, it's fairly likely we could be looking at a waterfall event where a series of downside moves occur. Okay, now this is the valuation index, and remember, this was support that occurred back in October of this year. This was real valuation levels as presented by the 2019 rally. This move here was a euphoric move, almost like a .com rally, where everyone just kind of piled into the trade expecting everything would be fine. Little did we know that we are going to be looking at a potential contagion event because of the coronavirus. Ideally, ladies and gentlemen, it would be very likely that the valuation index could fall at this point 50, 60 points back down into this 125, 130 level, and potentially move down to the lows in the 100, 110 level before trying to find support. So pay attention. We could be looking at a 12 to 15, maybe 18% decline in the technology and NASDAQ sector, as well as a 6 to 12% decline in the major U.S. markets over the next 3 to 4 months. So be aware. When this happens, it's going to be fairly quick, in my opinion. Okay, let's go ahead and take a look at some of the charts. This is the ES, and remember those gauges I showed you earlier. This is what I use to determine the short term down here on the daily and the longer term on this weekly chart. So hypothetically, we're green here, we're still in an uptrend. We're green here, we're still in an uptrend. Even though we've seen this rotation, we still do not have any indication that trend has changed. This would again be cautious. I believe we're in the midst of a trend change. I believe the smart cash index and other custom indicators I use are warning that we could be looking at an absolute change in direction over the next 5 to 6 weeks, possibly sooner. The NQ took a big hit Friday. It's down 169 points. You can see, though, still bullish, still bullish. We don't have any real indication yet that anything has changed. As I've been warning, a downside move from these levels in the NQ would put us, in my opinion, back here in the 74.20 area, 74.40. Long and short of it, this range that was established in late 2018 and almost all of 2019 is where I expect to find initial support, particularly right in the middle of this range. I expect to find very strong support right in the middle of this range. So again, what this would tell us is that we're looking at a potential move from 94.50, call it 94.60, down to 73.50 roughly. So that's, again, a 2,100 point move in the Dow. Pretty big move. Okay, YM, again, was fairly strong to the downside. You can see this rotation, this almost double topping formation up here. You can see that we had a warning up around the 30,000 level. This is still a very strong psychological level. There is still a potential that the Dow could attempt to touch or come near the 30,000 level before finding real resistance and turning around. But we have a pretty good rotation here, a nice rounded top formation after this weakness, almost looking very similar to the top of 2008 before everything kind of broke loose. We're still bullish. We still have strong upside, bullish trending in both signals. And again, this mid area here is really kind of where I believe support's going to be found. So around 25,200. Gold, as we showed you, is taken off. It's really just starting a major move here. You can see, try to get this chart a little better. You can see where we're at. I expected a move up here to about 1700, more downside correction, and then a move back up above 1750, possibly to 1800. So ideally, ladies and gentlemen, just extend this like this. This is our move. This is our move. And potentially this is, oops. This is our move. So this watch around 1675, 1700, 1680 for potential resistance, and then a bit of a reprieve potentially, and then another move higher. Again, gold will move parabolically. So you can see here, this is a pretty good example of what to expect in gold. Going to move up, stall around 1700 for briefly, maybe 3-4 weeks, and then turn around and probably shoot to 1750 or higher. Silver is the real success story here. Silver is just waiting for an upside move. And again, I have indicated that long term, I believe silver could move dramatically higher, potentially as high as $50, $60. What we're seeing right now is we saw a little bit of upside movement here, but the markets have stalled in this move in silver. You can see this pennant formation that I've shown here with a simple count, 1, 2, 3, 4, here we go, up to the upside. My expectation is $20 first, then roughly 21, then above 22, 23, and at that point, silver will likely begin to accelerate much quicker, attempting to keep up with gold. By this time, gold should be above 1750, 1760, possibly moving up above 1800. So be aware, silver and silver miners are a huge opportunity, and I can't stress that enough. This is really what I believe to be one of the best trades of this year combined, silver. Okay, oil. Oil has recovered a little bit recently. Understand that globally, supply is still very strong, and the global economics as well as transportation, manufacturing, shipping is all starting to slow down excessively. I believe oil is going to move down below $50, possibly in the $44, $42 area, as I've shown you here. Pay attention. This might be a very good setup to try to get into ERY or some inverse energy oil ETF on the next downside move. We're at 53.40. Very good chance that oil could take a move kind of like this. Try to draw it for you. From this level down to around the $44, $45 area. So there's a very good chance that this is going to happen on continued economic slowdown news and central banks trying to intervene. Bottom line is people are not traveling, people are not buying, they're not buying cars. It's not happening very quickly yet, but pay attention to what happens and what consumers do and what economics do. Eventually, it'll level out as some level of economic activity will continue. But for right now, I believe oil's poised for a move down below 50 and possibly in the $44, $42 area. Natural gas, we had a big upside move last week with a bit of rotation. You can see it's still bearish. As I've indicated to you weeks before, this bullish zone down in here is an excellent opportunity to try to get into natural gas on a basing level above 160, 170. Any move below 180, 185 is a good solid buy level. We're looking at a potential upside when natural gas uh, breaks, a potential upside up into the 230, 240 level. So you've got a pretty good rally here set up. Just you have to time your entries. You have to try to buy near the low of this area and or wait for rotation. We've got a little impulse move here. This is what I call it. If we get rotation back in the 170, 185 area and you're able to get in, then look for the next move possibly up into this 220 area. Okay, the industrials, Dow Jones Industrials. Very interesting in the sense that we have these support levels that I've drawn. You can see the lines I've drawn in previous video reports indicating what I expected to happen many weeks ago. We're nearing this kind of a double top formation. It's very likely that we're going to see 2,600, 26,000. Possibly some rotation, maybe lows in the 25,000 range, possibly even lower. Remember, this range here is where I expect support, but this is what I believe is likely to happen. And overall, ladies and gentlemen, I believe the U.S. markets will recover much quicker and much more effectively than major foreign markets. So pay attention. If we do end up in a downside move, it's very likely that the U.S. markets will be one of the first to bottom and begin an upside recovery. So again, Dow Jones is still bullish. We have no indication yet of downside rotation, major downside rotation based on my trend following system, although we do have some real potential warnings setting up. Transportation index. You can see the transportation index is still bullish. We've got an excellent flag formation setting up here. I'm counting this on a wave formation and a downside formation. So one, we come back up here, 2, 3. Well, let's count it different. 1, 2, 3, 4. And then we have a little rotation, false breakout back into the apex area. And I believe this is what we're going to be looking at for transportation. A breakout to the downside, moves back down here to around the 8,600 level. And I'm just waiting to see what happens. Right now, like I said, everything is bullish. We're right in this neutral area. We don't have any real indication that that any downside move is really taking place yet. We do have this rotation, this failure to establish a new high right here. This is a fairly good indication that once we get below this level, which is historical support down in this area, 10,528 on the transportation index, we could be looking at a real breakdown move. Okay, XLF, the financial sector. Interesting here in the XLF is that even though we've had fairly solid upside trending and still an upside trending here, we've gone back to yellow in recent activity. This is a sign that trend strength is weakening. So the financial sector is weakening. The financial sector will likely take some pretty big hits if we see some economic slowdown resulting in failed corporate personal loans and failed infrastructure, industry, manufacturing. So understand the financial sector has some serious risks. And ideally, we could be looking at a move back down into these lower levels, 24, 23.50. The SPY, Still bullish. We had a little bit of weakening here. That's what this light green candle is right up here. We do have this type of rotation with these gaps we need to be aware of. We're seeing some downward activity, but we have no trend change yet in my dynamic rotation modeling. The mid caps, something that we all should follow. You can see we've gotten some weakness here after this recent peak. Looks very similar to the transportation index in reality. You can see we had gone a briefly negative back here. I expect that the Russell, the mid cap, the Russell 2000 will trail lower, will break into a downward trend. And you can see my arrows drawn from weeks ago. This is what I believe is going to happen as we start experiencing this extended economic contagion. Real quickly before I run out of time, the mid-cap futures, S&P 400, still bullish. Again, understand that the system, the trend rotation system hasn't shown any real weakness yet because we're just starting to rotate up near these highs. So there's really no change in trend. It's just a tiny little bar right near these highs. Lastly, we'll talk about the VIX. The VIX is getting ready to shoot much, much higher. Be prepared. You've got this extended volatility that's setting up right here. Now we're back in the 16, 17 range as let's call it normalcy. There's a very real potential. We could see a very big spike up above 30, possibly up above 40 on a big breakdown move. I believe that's going to come over the next 3 to 4 weeks. Be aware. And lastly, I think what I'm going to do is leave you off with GDXJ, the gold miners ETF. You can see both bullish. Excellent opportunity here, ladies and gentlemen. How high? In reality, once it gets above this level, this previous high level, 52.60, there's a pretty good chance you could see $70 price levels on GDXJ. That would be almost a 100% gain, call it a 72% gain from current levels. Be aware, the metals are the real standout trade opportunity right now. Currencies will fluctuate, oil will likely decrease, the markets will likely continue to wave lower in a waterfall type event. We're just getting ready for some very big sector rotation in the markets, and you need to be aware that this is likely going to last for a bit of time. All right, I'll keep you updated soon. Good luck next week. Talk to you later.